Hi, everybody, and welcome here to the South African investment webinar, especially for property, of course. And thank you so much for joining today. We were yesterday also live. We had a little hiccup, so sorry for that, but now all good. We also been recording, so we will send this out as well if you registered. And yeah, without further ado, I won't waste too much of your time. We are going to talk about a couple of things in property here in South Africa, and we are going to talk about the process of buying property in South Africa. We're also going to look at the bigger picture of South Africa in the world, what is happening, from an economical perspective and politic perspective, etc., etc. And then we're also going to look into the tech because what we have seen post-COVID was very much, a shift through technology that enables location independency. And then we will also look at a few opportunities a little bit later as well. Please do have a look at the chat. If you have questions, please put it there. I will be answering them. It will be about 40 minutes, I think 35, 40 minutes. And then after that, it's open for questions for anybody. All right, super good. So who am I? I'm Michiel.devogeleer. I'm actually from Belgium. I moved about 7 years ago permanently to South Africa, just so before COVID. And I come here already 15 years, come here for windsurfing, never look back. What a phenomenal country, what a phenomenal lifestyle here. And this is something that for me, it put me in a position that I went through the struggles of as an international to actually start to make a living here, but also, start to find a job, start to work for myself, start to invest in property. I know how it goes from an international perspective, and that's why I like to work also with internationals. Besides that, so I actually trade as an independent real estate agent with EXP South Africa, but I am trading under devogeleer.property, which is obviously my own thing. I also am a director of Belcro Investments, which is a property investment company that is focused on cash flow positive properties, but on long-term tenants, long-term rentals. And then we also focus a lot on next generation business development, and mainly cyclic business models, strategies, marketing strategies, and so forth. That I also implement within EXP, do training for that, and then also implement in my team to scale my business. So that's all about me, but that's not why we're here. We are here to invest in property and, to do a bit of due diligence on that. Obviously, the first thing that you need to know is, okay, your situation. What is your situation? What do you want to achieve? What is your vision in the future? Why do you want to invest in property? And there's so many different kind of ways how you can invest in property. Whether you want to invest through, flipping property, buy land, or you buy an existing property, you want to, you bought it at a very, under the market related prices, and then you have some budget to make it like new and sell it with a profit. Now, there's a lot of different ways. You can do development from land, you can do long-term rental returns, you can do short-term rental returns, you can focus on value appreciation, or you can even look at the tourism industry where you say, look, I want to buy land, I want to buy a farm, or I want to buy an eco-lodge, or whatever it might be, and generate different revenue streams through accommodation, events, and whatnot, restaurant, stuff like that. A lot of people obviously also buy for residence, so that's what I personally did as well. At first, I bought as a residence because I'm staying here with my family now, full time. Or what I see most with the people that I connect with and of my clients are people that are looking for hybrid solutions between lifestyle and investment return. Meaning that now they want to put it on Airbnb, want to stay for a month, 2 months, 3 months, a year, and the rest put on Airbnb. Returns are quite good. You have the flexibility, and then also, should still be cash flow positive, depending the investment, of course. Yeah. So what I would definitely suggest, if you are looking at property in South Africa, please do chat to an agent that has that international experience. And obviously, this is the reason why I also host webinars. But if you would look at my track record last year, for example, 80% of my, well, 75 this year is 80% of my sales is is international, and 25% of the sales is through technology, where we are, where people actually never see the property in real life. So they basically come to me, they say, look, I'm looking for this. And we are doing virtual tours, or we are doing WhatsApp calls, etc., for them to actually make a decision, sign an OTP, an offer to purchase, and move forward. If you are an investor, then you must just make sure that your numbers check out. I think that is the most important thing. If you're purely investing, if it's for hybrid or for residence, obviously it is a little bit more tricky to do so. So what do you need to look at if you're buying property here in South Africa? And I'm mainly chatting now about Cape Town. I have properties all over the place, but Cape Town is definitely, the way forward if you want to look at lifestyle, and also from a return, especially on the short-term market year round. Then what do you need to look at? There's a couple of things. Purchase cost, of course. So the purchase price, see how, what the market related price is, what the valuation is of that property, of course, and what the value appreciation could be. Now, there's a few costs involved with buying property in South Africa. And that, for instance, is the purchase cost, of course. There's transfer duty or VAT. That's basically one or the two. And you must also see, if you are looking at Property 24, for instance, or a listing platform where you want to browse for property, then you must know that if it is a VAT-related purchase, meaning that the vendor is VAT registered, that means that the listing price will already be including VAT, and VAT is 15%. So it will, there is a bit of a discrepancy between VAT-listed listings and non-VAT listed listings. So it gives you a little bit of a wrong idea to compare those ones if you look at it on Property 24. Now, transfer duty is actually the same as VAT. VAT is also, VAT is, always priority over transfer duty, but transfer duty is when you're not a seller that is VAT registered, you will see a listing price, and on top of that, you will pay a transfer duty, which is in specific kind of brackets depending on the value of the purchase. So that's one thing. You need to chat also to your realtor to see how much that's going to be. I can very easily calculate that for you guys. Then we have monthly fees like levies, which is basically a cost a monthly fee that you pay to the body corporate who is organizing and managing the building. Whether if it's for electricity, water, security, pool maintenance, stuff like that. So all kind of common costs from the building will be put into levies. And levies, to me, is something I'm very much look at, because they can also, be very different from building to building. But it will definitely give you a good idea if the levies are a lot higher compared to the amenities and facilities that you actually have in the building. Then it also means that the financials are not managed 100% properly, and that there might be a lot of outstanding levies of other owners in that building. And that is something that you have to be aware of, because that has a result on the levies as well. Rates is a monthly cost, a monthly tax actually from the municipality to organize everything from, sewerage and the bins, to pick up the bins and rubbish and refuse and stuff like that, like connection with your prepaid electricity meter, etc. Yeah. Now, that is obviously the biggest chunk of what you will look at as an investor, because from there you will find or you will calculate your yield projections. And personally, I always calculate the net yield projections, which includes the purchase cost and the monthly fees, and then calculate the annual return as well, to then get to the yield projection. And the yield projection at year one is never the same as if you would have year 2, 3, 4, 5, because obviously we have inflation that will help you to actually pay off your investment faster every single year. Yeah. Here in South Africa, we have an inflation about 7-8%. The maximum ever recorded was I think 15%, but obviously we have a lot of hyperinflation. So the numbers that they put out are not the real numbers that you will really feel in your pocket if you go to the shop. Yeah. All right, so then we have also the area. And there's a lot to say about area, and I'm not going to go too deep in this, but if you look at South Africa and Cape Town, you want to look at an area where you have a whole year throughout return. You want to look at how the area is managed from from the municipalities. You want to look at micro areas regarding crime and vagrants and stuff like that. Obviously, we are here in South Africa. We still have a little bit of vagrant, well, a little bit, we have quite a bit of vagrants and so forth. The crime, personally, I think a lot of people are thinking that the crime is insane here in Cape Town. Well, yeah, not really, actually. Personally, I didn't have like any problems in the 15 years that I came here, but I think there is definitely, crime in areas like Johannesburg and other areas, or lower income areas as well, like a lot of townships and so forth around the suburban areas, or the areas, let's call it like Atlantic Seaboard or Cape Town city center and so forth. So I would definitely look at those areas where you have like a good amount of traction in tourism as well, if you because that is usually also how do you say that, better managed as well. Yeah. So, and then the last thing that I think is very important is lifestyle. And if I look at my clients who are buying here, they're looking for an investment return, but they're equally looking at lifestyle. And the good thing is that both of the topics here in this, in the investment perspective and the lifestyle perspective, we both have an amazing location here, where you can literally do everything from nature to sports to culinary experiences to cultural experiences, and everything is very close by. And the people are phenomenal. I'm sure that you have, if you are here in this webinar, that you can relate to that. All right, so how does it work to buy a property in South Africa? It's actually quite straightforward. We have a good system in place. It's all quite regulated. Usually it takes about 3 months. It depends as well a little bit if you take a bond or if you buy cash, or a little bit about smaller kind of parameters. But from the moment you are willing to, you decided, yes, I want to go for this property, what do? Well, you get a defect list from the seller. You see what's wrong, or it's a declaration of what's wrong. You sign it off together with the OTP, which is an offer to purchase, which also means, which is basically the sales agreement. And once that is signed by the seller and agreed, offer accepted, we go through FICA for money laundering and so for fraud and money laundering. Basically, it's just merely sending some documentations of where your funds are from, where you registered as a resident, your ID, your bank statement, bank account, at least the proof of your bank account, etc., etc. So it's not really so difficult, but it's definitely a very big topic in the industry. From the moment your offer is accepted, you must bring in money for the deposit to pay, usually within a few days. But bear in mind that if you are bringing money in South Africa, make sure that the bank or the institution that you're using, or the organization like Currency Partners, for example, very good, is to bring in money from overseas that is linked to an MT103 documentation, so that proves that the money comes from overseas, so you can bring it out again very easily in case you're selling your property off in a few years or 10 years or whatnot. Yeah. I think that is a very important thing, and obviously with all kind of partners that I'm mentioning, I can connect you as well. So I get quite often the question as well, like, should I get a bond in South Africa or not? Well, I can tell you this. In South Africa, you can take a maximum bond of 50% of the value of the property. So let's say you have a 2 million rand property, so it's about 100,000 euro. You can take a bond for 1 million rand. But of course, you need to put 1 million rand cash. But on top of that, also the transfer duty to be paid, which can also be, depending 60 to 150K, depending on what kind of value of the property. If you're looking at 10 million, it's going to be a lot more. It's going to be closer to 500 to 700,000 rand. Need to recalculate it actually. Or alternatively, you have a collateral in your home country, of your country of residence, where you are now leveraging the equity that you built up in that property to remortgage, and then take a mortgage out and then invest this in a property here in South Africa. Or alternatively, you have another property, or your parents have a property, to use that as collateral. But obviously, it's a little bit more complex. In any case, if you take a bond overseas, meaning outside of South Africa, you will be seen as a cash buyer here in South Africa. All right. So the registration takes about 3 months. Like I said, from the moment you have paid the deposit, it comes basically to the point where you have to give a proof of funds, whether if it's cash, you put a South African bank guarantee in place, or you can put the full amount of the purchase price into the conveyancer's account. The conveyancer's account is a notary, and that is usually be done after 30 or 40 days within the transfer process. Yeah, you then also pay the transfer duty if it's not a VAT sale, and then you also pay the transfer fees. The transfer fees are basically notary fees to the conveyancer, because they are managing everything from registration, and there's quite a few people involved. I think there's between 10 to 14, depending if there's a bond or not, people involved to actually get your property over the line to get it registered on your name. And then you sign the transfer documentations. That's also about 2 months in the process, sign transfer document, and you must do that in front of the conveyancer here in South Africa. If you're not in South Africa, no problem. You can, go to the South African embassy, sign it there in front of them, or to a notary anywhere in the world that is, basically the witness of saying that you actually signed it. So it's a very easy process. It's registered from the moment it's lodged at the deeds office. Takes about 7 days to actually get it registered. So from the moment you get this message in your inbox, you know that you're good to go. Yeah, that you can organize yourself to get, to organize short-term management agencies, or getting tenants in there for long-term or whatnot, whatever you want to do with this property. This being said, we have quite a bit of systems for location independency, and I'm just going to see if I can share my screen here. Yep, I just want to share my screen, and I'm going to share here, for example, my metaverse, because this is basically where I do quite a lot of business with location independent professionals. So it's loading here. There's quite a bit of stuff open. So this is me basically. So I use this because I do a lot of business with location independent professionals, and I have, listed all my listings here. All my documentation are here, even, the OTPs, the mandates, everything, all the information is listed here. It's easy to share my screen. It's easy to connect you with all kind of partners that are also in the space here. So this is what I personally use a lot. And then I'll also use virtual tours, which I will be showing you now as well. There we go. There we go, this one here. So this is what I shoot with my phone myself, and this really allowed me actually to, especially for investment properties, to show you like what the property is all about. If there's any damages or not, you can zoom in, you can zoom out, you can look everywhere. We can do also guided sessions here. We can do basically sort of a WhatsApp call in this kind of environment, so that you can actually browse through it yourself and ask questions in the meantime. Yeah. Let's see. So I'm just going to stop this and I go back to my presentation. Oops. All right. There we go. So these are the things that really helps me forward a lot with people that are, in the buying process. Maybe they're just going, maybe they're only here for 5 days. We show the virtual tour. A lot of times they sign properties, for 25% actually of my sales is to people that, make a decision on the virtual tour. Oftentimes we can also put in the offer to purchase with subject to viewing. And then, once you come in view, you can sign it off and it all goes through. All right. Now, the more interesting part of things, I find it myself, is the bigger picture. Because when we look at Cape Town, we see, that Cape Town has become the 7th top destination of location-independent professionals. So if you see LIP here, that means location-independent professionals. And this is quite a nice kind of thing that we obviously see since post-COVID, where a lot of companies were, telling the employees to work from home. But if you can work from home, then you can basically also work across the globe. So this is a very nice trend what we've been seeing. And, destinations like Tulum in Mexico and Portugal and Indonesia are all very interesting kind of location-independent destinations, yeah? So for South Africa, this is a very good thing because South Africa is actually the leading emerging market in Africa. And on top of that, the Western Cape is very well managed, I must say, compared to the rest of South Africa. Yes, we do have load shedding. Yes, we do have less load shedding than any other area in South Africa. That is also because we are, we have the Democratic Alliance that is leading the Western Cape. We are a lot more on top of things from resource management. We have gone through some crises before, so we have actually put a lot of things in place now. If you look at load shedding, I went to an event last week. They were saying about 4 to 5 years. I'm not sure if it was for South Africa or for the Western Cape, but one thing surely is that the private sector is taking things on to levels where, they are growing very fast to come up with problem solving, with solutions basically to get yourself sustainable and even off the grid completely. And also the government is also now giving some rebates on some solar panels, etc. So there are some good initiatives, and I think that they will only grow. And by the time that load shedding is then blocked off for here, we will probably be quite nicely positioned in the global market with these kind of technologies as well. But I also must congratulate the mayor of Cape Town. The way how he is cleaning up the city, the way how he's cleaning up after the storm or after, for example, the minibus strikes. He was very firm and is definitely a good leader to have in the Western Cape, and quite excited about that as well. And then what probably everybody is thinking about is what is going to happen with BRICS. BRICS, for those who don't know, BRICS is Brazil, Russia, India, China, and South Africa. It's an alliance as well for trade between all those countries. There's actually, I think there's 10 more countries that have been approved to become part of BRICS, which is a very good thing. We are now with about 40% of the population of the world. If those countries actually join, I think they are accepted, but still need to join, is about 60%. And if you're looking at 60% population of one kind of alliance, then it becomes very interesting from shifts in global markets when I talk about war and oil and all these kind of things that is happening at the moment. But also from a finance perspective, in August this year, there was a top of the BRICS countries to talk about currency, if they are going to unify currency, and if it's possible to make currency. And this is very something that we have to keep an eye on. It might be a very big opportunity for South Africa if that would be the case. At the other hand, it will definitely have an impact as well on the world reserve currency, especially because we will have then 60% of the world population. So that means that there might be a shift also on that side. And done to make it a little bit more complex is if we're going to make a unified currency, which is not necessarily possible because we have a very different kind of structure from a marketplace from China and South Africa and Russia. We still need to see how we can make it work for all these countries that actually are from a geographic perspective so far away. But if they would come to that point, we'll probably go into CBDCs, which is definitely quite also a interesting topic. Can be scary, probably can be scary from world control, but on the other hand, might also come with some opportunity. Yeah. So the bigger picture. So when you have money in the bank, yeah, having money in the bank is always very good if you are, if there's a recession coming. Is there a recession coming? Who knows? Probably yes. There's always a recession coming, but nobody knows when it's going to be, whether it's in 2 years or 5 years or whenever it's going to be. Now, if it's recession, obviously money in the bank is very good to have. But if you're looking at the current situation, inflation is out of control. And what for me is very counterintuitive is the fact that now the interest rates are literally a record of interest rates, which is now at the prime rate of 11.75%. For those who don't know, here in South Africa, we have bonds for about 20 years. Our life expectancy is lower than in Europe. So we've put it at 20 years at 11.75% at the moment prime rate, which doesn't mean that you will get the prime rate. But every time the prime rate changes, your rate will also change, and it can change in 2 months, 3 months, or whatever it might be. It's not a fixed interest rate that you see, like, for example, in Belgium, where I come from. It's a fixed rate that you negotiate for 30 years, and then you negotiate once or twice again in the course of that bond. But here now we have an interest rate at 11.75%, which is usually put up so high to control the inflation, but the inflation is also very high. And actually, in Europe, it's also not so good. I think that it's one of the first years in history, actually, that inflation is lower here in South Africa than it is in Europe. So that's also something very interesting to take a look at for the future. So I wonder, how come does the interest rate and the inflation is both so high? Well, that's quite fairly easy to say because the States, for example, have been printing money for the last 3 years. I think they printed 60% of the money. So that means that your money is diluted, and that means that your buying purchase power drops incredibly. And we have a saying here in South Africa that is when the United States cuffs, then South Africa gets the cold, is the saying. And it's quite funny because, yeah, we are definitely a country that is very dependent on international transactions, especially also from the rand and our currency. We are probably the most volatile currency, or one of the most volatile currencies in the world, meaning that there's a lot of people that are trading their currency with the rand to take profits, and it's basically it has an effect that it undervaluates the rand quite a bit. So now I think we are sitting here. Let me just quickly check. We're sitting here at how much is it now? I think probably 20 or 21. Let me just check quickly. So, it's 19. So €1 is now 19.95. So let's round it off to 20. Yeah. But actually, if you would look at it, it would not be that much. So let's see how that will evolve as well. I think there's definitely an opportunity. But for that, we definitely need to have a little bit more stability in our currency. Yeah. All right. So what would I suggest in this kind of topic? You want to invest in kind of different things where you hedge yourself against the inflation. You want to be on the good side of it. And how do you do that? Well, you hedge it against property and raw materials, for example, like gold or like silver. Silver also used a lot for technology. So there's definitely a higher demand for silver that will have effect on the price of silver in the long term as well. And property, of course, is there's an increasing demand. We see a lot of developments. I think we saw about 22 developments, new developments here in South Africa, in Cape Town, sorry, that are doing quite good. It has a value over 300 billion. I'm not going to say it. I don't know it. So, but it does allow you to get rental income. It gets, your value appreciation is obviously the inflation part where you can get, where you can get some profits and get capital gain. So I would always say, look, if you have some money to spend, I think property, gold, and some, shares of companies that you're very much affiliated with are always going to be good investments. But you have to follow up, especially with the shares, to know when you have to take them out, because that can go, sour very quickly, depending on what is happening in the world. And if someone says something stupid, like our president, then the rent goes down quite quickly for a few days. All right, so the bigger picture, the rise in inflation. I did also already say interest rates are increased now 11.75. We're not sure if this is going to be increasing a bit more or not. But in this case, I would definitely advise you to buy cash or to look into, your country of residence to take a bond out. If you would calculate 11.75, then you will probably pay over time about 2.5 times the property purchase price. So that is, that has a huge impact on the local affordability, because the local affordability, obviously, they are not exchanging through the exchange rate, so they, I did read about an article the other day that we have about 37,000 people in South Africa that are euro millionaires, where in the UK, that's 2,500,000 people. Just to say like how big this country is, but how little wealth there is. If the people are rich here, they're shit loaded, they're freaking rich, and the discrepancy is very big. But this is now again a way how you can see that the middle class is almost not existing here in South Africa. And then we have the control of demand. So that's basically the interest rates are going high to control the demand. But it creates a lot less local affordability. But that does actually plays in your cards as internationals. You will be able to, get better deals as well. It's definitely still buyer's market. After 2018 was the best year we had. It was, peaking. 2019 was still very good. Then COVID hit and then it dropped off. And now it's still recovering from COVID, still to a certain degree. We're still not 100% where 2018 was. So what I also see is that, there's more midterm rental demand. And what do I mean with that? Is people that come from overseas, location independency, now instead of people coming for 3 days to Cape Town and then 10 days for the rest of South Africa, now we see people flocking here for 3 weeks, a month, 2 months, even up to 6 months, because that is the maximum amount that you can stay here on a tourist permit. So we do see that actually we have maybe some less kind of tourism happening, but we have a huge demand in short-term to mid-term rental stock. That is something that I think is something to keep an eye on, because I think this will definitely play in your cards if you're investing in property. But I am talking about this, let's call it, I don't want to put a time on it because that's speculation, but short-term rental, mid-term rental is a little bit more volatile than if you look at long-term tenancies, where you have basically more continuity and more focus on locals as well. So you can create a higher return of investment in that regard. Yeah. So the opportunities in South Africa, the average price of a property is 1.1 million rand. It's 55,000 euros. I'm sure that you think like, oh wow, what's that? That's nothing. Exactly, that's nothing. If you look at Cape Town city center and Cape Town, Atlantic seaboard, obviously you won't have this. This is for all the properties in South Africa, including, all the poorer areas as well. Cape Town is considered to be actually quite expensive for the South African market, but still super affordable due to the exchange rate for Europeans, Canadians, Australians, and Americans and so forth. So we have a high ratio of purchase price versus rental income in South Africa. And, it is a good thing for investors, but it's very unfortunate thing for, for less fortunate people or less rich people. So your cash flow positivity is definitely not a myth here in South Africa. And I'm going to show you a couple of opportunities in that regard. So you can see here what it costs, to rent and to buy. So you will be able to see the top ones are the countries that is the most interesting from, investing, because you will, it's cheaper to basically buy than rent. And you can see Finland, Italy, and then South Africa. But I am sure if you would look in specific areas in South Africa, it's what I'm doing with Belker Investments, is that you will be able to find incredible deals that are cash flow positive from day one. And then we look here, Belgium is not too bad, but still that's a 12 point something, 12.3, I think, 12.3% less interesting. Here we have all the other European countries: Poland, Norway, Austria, Ireland, United Kingdom, 23, 17.6. It becomes a little bit less interesting. Germany here, very on the bottom, together with Portugal as well, 41.2. So that's definitely not a great kind of place to invest unless you want to develop or stuff like that. That's a different story. I'm just talking about return on investment on the rental. So we can find positive cash flow positive deals, and I'm going to show you a few here. So what is a pro of finding long-term tenancy in low price ranges? Well, one, there's little management. Two, there's very high yield, because you will be able to rent it out over 1% of the purchase price. So that's like a very easy rule. If it's cost you R1 million and you can ask 10,000 Rand, then you're actually in a very good space. You probably won't be cash flow positive if you take out a bond, but there are ways to actually get properties that are, for example, 600,000. We did now a month ago, we bought one for 530,000 Rand. We rented out for 6,000 Rand. So that makes us cash flow positive, and we are actually, letting someone else pay our properties. Yeah. And, also from a low end, with the current inflation, with the decreasing purchase power, the low end is a very good bet on the long term. People are downscaling a bit more in general. So definitely a very sustainable business model. The cons are finding deals and also, doing due diligence, because you work with a lot of different cultures, not always easy to understand, or, so it definitely has a bit of management from our side, from finding a good tenant, but from the moment they are in there, it's actually little management. And the solution is Belker Investments. So that's that's the property investment company that I'm a director of, together with my Croatian business partner. It's a phenomenal, scalable business model. And you can also invest in there, actually, if you are looking to invest in property, but you don't want to deal with all the hassle, then you can just actually do a financial investment in our company from 40,000 euro, which is 800,000 Rand, which will be quite difficult to find a property in Cape Town and Atlantic Seaboard. You won't find anything for that price range that is interesting enough. So you can do that, and we give you a guarantee of 10% return on an annual basis. So that means that you have a minimum input of 1 year. After 1 year, we want to pull it out. You put 1 million Rand in, you get 1.1 million Rand out. So there's very low risk, because you have a guaranteed return. You don't have to deal with other people. You don't have to deal with anything. This is us as Belker Investment taking a risk for you. And I think we can agree that 10% is incredibly high if you compare it to the interest that you will get on the bank in Europe. All right, so it's then we also have the most people actually contacting me as a real estate agent. Then in this case, they are looking for short-term rental returns. And, the pro is definitely that you have a high return potential and that you have a high flexibility. For instance, that you want to go there, there's a gap in the schedule. Now you can go there as well, or you block it off for yourself. You stay there a month, and now you rent it out, pays back, and make some profit on it as well. over your investment. It's definitely a booming market, but it is more volatile regarding global economy, like what we've seen in COVID. A lot of people that went into Airbnbs went to, long-term tenancy, and that was also a bit difficult because now they were moving out of town because now they could work location independent until the internationals came back, and then everything changed. But for the internationals, you need to look at the seasons, and some areas are producing over the season, but the price difference is quite high. And in some areas, most areas actually, you won't have any bookings in winter time for 6 months, 4 months, 6 months. So you must take into account that you will have to, that you basically have to calculate that as well. So do chat to me if you are looking in property. We can easily give you a projection, of short-term management agencies, etc., etc. However, if you use short-term management agencies, it will come with quite a bit of a cost. They charge you 20%, and then you have the booking platform fees, and then you have your electricity, and you have your Netflix and your Wi-Fi, and then they leave on the air conditioning system in wintertime, and that's 4,000 Rand of and so forth and so forth. So there is definitely a bit of management involved to streamline your investment, and this is something that I definitely can help you out with as well. And then midterm rentals, we mentioned it a bit already. I mean, this is the location independent professionals. I see it all the time, are trying to organize themselves from a community, which is very cool. But it lacks a little bit of regulations or reach, or a bit of it still lacks a bit of structure. And I think there's quite a few people that are doing good stuff in that space, and I think something to keep an eye on as well. I do get a lot of questions of renting something for 2 months and 3 months, and for real estate agents, it's quite difficult to actually provide that. But we will be able to, to find new kind of deals, and this is what I also did now the other day when I was looking for properties for a client, and I got in touch with Neighborhood, and Neighborhood, I know them very well because we were also trading in the neighborhoods market on the old biscuit mill. Before I was in real estate, we were trading some food there, and the brand is really great. So what is a pro of midterm rentals? That is that there's a big market share to take because there's little players and there's a big demand, booming, 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 and we can't follow up on that. Now, the other pro is that you can invest in this kind of opportunity, in this kind of market. And the cool part is that you can invest from 5,000 euros only. So that's about 100,000 Rand. And I will get to that just in a bit. Another pro is that it's community driven. So it's, the location, independency, the lifestyle. Why do people come here is because they also like to connect with people. It's very easy to meet people here on festivals, or you just when you go for a drink or on the beach or whatever you might do. But these kind of concepts that are putting up to play are now being developed are very community driven, where they have co-working office spaces, etc., etc. The negative part of it is that it's still seasonal. So also regarding the previous one on the short term, you will have to do a right price setting, but that will be obviously taken care of by Neighborhood as well. So I just wanted to show you the solution here. I did chat already a little bit about it, but Neighborhood basically are a fast scaling company that also scales internationally. In January, they will launch their first one in the States. And then we have also some membership benefits, or you get discounts if you want to stay, depending on, if you invest in Neighborhood from about 5,000 euro, but you can obviously invest also 50,000 euros. You can, you become part of the community, and for that you get benefits as well, from workspace, from events, from discounts if you stay in Neighborhood worldwide. And then we also have a low risk because you get actually 8.5% to 9.5% guaranteed return. It's a little bit less than in Velcro, but with a big difference that you also be an owner, so you have co-ownership. where you get capital growth per annum about 4 to 7%. Just know that for this investment, you have to put your investment between 5 and 15 years. So it's not on an annual basis. So how does it look like? This is basically, if you look here downstairs, this is the Romney and Greenpoint. Then you have on the rooftop there some events as well that they're hosting. I think this is in the Waterkant, or at least close by. So you can see some yoga, some parties on the Old Biscuit Mill. There's also the neighborhoods market. They also host now Saturdays afternoon beats, etc. So it's definitely very great for community and your lifestyle. Here you can see a couple of numbers as well, but I'm sure that with the guys of Neighborhood, we will definitely do a full-on webinar as well mid-November. So we will save your email address. We will send you out an invite. I'll also put it on the location independent groups here, the digital nomad groups, and invite you for that. So this is from me. This is from my part. So if you do have questions, please put it here in the chat box, or just go ahead. What I'll do is I'll send you also here my the link of my metaverse. I'll put it here in the chat. Thank you, Elena. It's really my pleasure. And I want to motivate you, everybody. Even though I do webinars here, I really like to connect personally and see how I can help you. Also have my team, of course, so we can attack it as a team. If you're looking for investment and pure transparency, then I'm definitely your guy. I'm here for long-term relationships. So if you're interested in property, and not necessarily only here in South Africa, we also have properties that we're selling in Lombok, Indonesia. I got some agents in Portugal, and also got a very good agent in Tulum, Mexico. If you're looking for a full transparent kind of advice. So I did put my Frame VR or exp.world link here. That's my metaverse where you can find everything. Yeah. Any other questions? Well, if not, then that's it for me. And I want to thank you for attending. This is also a recording. Thanks, Lee. That's 100%. I have this one recorded, so you will get sent the recording as well to your email address, so you can always go back into it and have a look. All right. Thank you so much, guys. Have a good one.